All right. All right. So here we are. YouTube is working, and let me just quickly check if Vanessa is there yet. All right. So hello and welcome to everyone. Greetings from Paris. My name is Saman. I'm honored to have Mark and Yorgos with me today, and Vanessa is supposed to join for the second episode of the From Emergence to Convergence series. So I'm the COO and Associate Dean of École des Ponts Business School, Professor of Technology Management and Digital Transformation. And I have here Mark with me, who is the Founding Director of Center for Policy and Competitiveness at École des Ponts Business School, and Yorgos, who is the Director of Circular Economy Research Center of the Business School. So Vanessa will join us soon, and then we will introduce her once she's with us. So before we start, I just wanted to give a bit of a context for those who are joining us for the first time. So From Emergence to Convergence is the name of this new series that I've launched with the support of my good friends and colleagues. So basically, technology is the overarching topic for this series, with a focus on competitiveness and circular economy. The discussion in this series is relevant to entrepreneurs, to investors, to researchers, directors, board members, and decision makers, obviously to all institutions from all industries. And the reason that we thought about this series and we launched it is that enabling technologies basically build the digital infrastructure for the forthcoming digital economy. And on the other hand, we know that faced to environmental, economic, and social challenges, SDGs are the best framework to follow, and circular economy is the only way moving forward to address the challenges. For this session, blockchain is the focus for this episode number 2 for several reasons. One is the increasing awareness and interest in the technology from the society, institutions, and the economic actors for reasons that we are going to discuss in this session. Number 2 is that blockchain is entering to a maturity phase from design, application, and implementation perspectives. Are we there yet? Well, to be discussed in this session with the experts as well. And number 3 is that, at least to me and to all those who believe in the blockchain technology, blockchain is the missing piece of the puzzle when it comes to data-driven economies, combinatorial innovations, and convergence of technologies, simply because it empowers several layers of the digital architecture and business modeling. From the bottom, it provides security and trust in provenance of data. In the middle layers, it facilitates the exchange of information and helps with transferability of information and data integrity. And on the top or the front line, it engages the community as an incentive system. So blockchain technology basically reinforces collaboration and data procurement, providing privacy, transparency, and traceability. And that's why we call it the technology of trust. In academia and also in institutions in the industry. On this point as well, we are going to hear the insight of our guests in this session with some practical examples from the industry and some insight on the policy and research fronts. Obviously, the topic is too vast to cover in a couple of series, but we'll try to cover some important points in this session with our brilliant guests sharing their insight. We will continue this thread of conversation from different angles in this series of From Emergence to Convergence. And I will also share the link with you to register to the mailing list in case you are interested in topics around technology, competitiveness, and circular economy. So without further ado, let me see if Vanessa is with us. Yes, I can see Vanessa is with us. I kindly ask Vanessa, if you're with us, could you give us camera as well? And we go around by briefly presenting the panelists. If not, we give it a couple of minutes. Yorgos, would you mind starting, please, introducing yourself? What do you do? Where are you connecting from now? And we can then move forward to Mark. Thank you.
Thank you very much, Saman. Actually, the question, what do I really do? That's a blockchain question. I need to really resolve it in that way. As you mentioned, I'm the director of the Circular Economy Research Center, and we are leading the research on circular economy, especially, I would say, at the European level. We are one of the first dedicated research centers to be established. And the effort that we are doing is to, let's say, give a special take to the circular economy angle from the technological perspective, because our research, as well as the policy, indicate that the two accelerating factors is in these domains is the skills and technology. So we really abide to that, and we're trying to help it as much as we can. Therefore, our work and our research is centered around producing credible data-driven results that would be beneficial for the for any type of entities. And given that circular economy is a very broad domain, and we will discuss in a while how beneficial it is with the blockchain as well, it is something that we want to provide to the outside world and avoid possible greenwashing in the domain. So that's what we do, and this is who we are, and we're very happy to contribute into these discussions and the series that we have generated.
Thank you very much, Yorgos. Mark, you want to go next, please?
Yeah, so Saman, greetings. I'm actually in a working space in Italy, surrounded by different people talking, their families, kids, because inside the hotel. My role, I founded the Center on Policy and Competitiveness at Pont. That's also where I did my DBA, finished in 2018. And the center really is a spin-off of work that I've been doing at Harvard for already almost 10 years. So it starts to be an affiliate center, one of the 4 in France attached to Harvard Business School and the Center for Michael Porter. We tried to mimic a little bit the spirit of the work on competitiveness that is mainly an overarching network, also within the context at École de Pont. The way we primarily deliver this is through courses and, of course, affiliation of faculty to the Harvard network and everything that is related to applied research around competitiveness. So things related to cluster theory and economic development at large. The reason why this is an important topic, and so like George, I'll try to attach it to the conversation on competitiveness and blockchain, and why the conversation of tonight is timely. Blockchain is profoundly changing the concept around value, and economic development is designed to create value. So when you start having, to some extent, a transformation on one kind, and you can see that the impact is going to be quite foundational in the way we create value in economic terms, you kind of start understanding how do we think or see blockchain reframing the conversation on competitiveness. And that's why I'm happy that we're having this conversation today, and happy that we are going to see this as part of the series that you initiated, because this idea of emergent and convergent doesn't only stop here. I think we started it, but it's like a work in progress. Back to you, Saman.
Thank you very much, Mark. Looking forward to the conversation. Vanessa, welcome. Could you please introduce yourself to the audience? Thank you.
Sure. Hi, everyone. My name is Vanessa Grellet. I'm an investor at CoinFund. I recently joined this VC and crypto firm where we invest across, Web3 capabilities, whether it's DeFi, NFTs, or infrastructure. Prior to joining CoinFund, I was working at Consensus, which is one of the largest blockchain companies focused on Ethereum for almost 5 years. and my background is in financial services. I also run the Blockchain for Social Impact Coalition, where we try to foster projects and ideas and help entrepreneurs create more impact with their blockchain solutions.
Thank you very much, Vanessa, and welcome again. So today we are going to have a conversation thanks to Vanessa's valuable expertise from the application side of blockchain, and also to Mark and Yorgos as experts in the field and also as researchers. So the conversation is going to be very dynamic. And basically, we have come up with 3 questions that you have definitely seen on the registration page of the event as well. So the first one is how is blockchain unleashing new circular and social business model innovation? The second one is what are the main challenges of integrating blockchain in circular economy? And the third one is why will blockchain be rewriting the rules of competitiveness? Obviously, we start off with these 3 questions, and then the discussion will evolve accordingly. For the participants, please, excuse me, please drop your questions on the chat, and we will address them either during the discussion or at the end of the conversation, depending on also on the areas of interest that we see from participants. We will accordingly adjust the conversation. So Vanessa, if I may, I start having your insight on the first question, which is how is blockchain unleashing new circular and social business model innovation, given your experience and your expertise with the Blockchain for Social Impact Coalition, and also your new role at CoinFund. Thank you.
So I think, taking a step back in general, the incentivization and the token economics can be used and directed in different ways, in helping people be rewarded for specific behaviors or contributions. And so that's really at the heart of what public blockchains do. In terms of like the private blockchains, you can think of having the consortium model where people collaborate together to create a network and a private network. So going back to the public networks, I was just on a call with a sustainable fashion company earlier on today, and they're looking to create a network of local factories and suppliers in order to address the supply chain disruption that we've had during COVID, and wanted to know how to incentivize people in specific ways, either for returning items, producing items locally, etc. So if you have the token economics that incentivize you, for recycling your clothes, and you get rewarded in tokens that you can further use in other networks or to foster future purchases, this is how we see the incentivization work on a concrete level.
Thank you very much, Vanessa. Based on your experience, how can we tell like blockchain innovation in the blockchain space for business model innovation specifically? Can we say, is it more coming from startups, entrepreneurs, or more from companies and intrapreneurs?
So it's definitely coming from startups. So the pace of innovation in the blockchain industry is unparalleled, especially I would say in the DeFi, which is decentralized finance, and all the, basically rebuilding the internet. And so I was speaking to a few other VCs that are more traditional VCs, and they said, I've never seen that pace of innovation even in other technology verticals. So definitely coming from there, large companies have more constraints in terms of their existing systems, in terms of what they can do or they perceive they can do in terms of innovation. So it's much harder for them to innovate, but they can definitely adopt and piggyback on the innovation that's being fueled by the startups. But you have to understand that the startups, they're really recreating the world. There's not a lot of currently like overlap between the new economy that they're creating and the legacy economy. So finding those bridges will be an interesting path forward. And then also mixing Web3 and Web2, as we've seen right now with the NFT space, is going to be also an interesting future.
Thank you very much. Mark, what is your take about this question of how blockchain is unleashing new circular and social business model innovation?
Saman, the most fascinating part of blockchain, in my view of things, is not necessarily around financial services, is in everything else that is somehow empowered by blockchain. So I really think that, again, you can say multiple stories could be told around this question. The part that fascinates me the most is the application to production and supply chain. Because, we have to remember that any form of production system is critical to how, regions, cities, entity, whatever grows, right? So by rethinking the way we design production, by integrating blockchain, I think this is not only enhancing the way we are currently rethinking value, but we're also generating spin-offs, which is kind of one of the things that happens in proper competitiveness circles. You kind of do something not for the specific end game that you're planning for, but hoping that you're going to get a multiplier impact. I think blockchain can really create a multiplier impact within the value chains. So I see this on one side, a game changer, and we all know that, but equally a catalyst to create access to business model that we currently didn't have, simply because it becomes a combinatorial accessory to the way you're thinking about value. And in some extent is becoming the value creation engine. So that part, I think that form of complexity around blockchain is still like great stuff for anything which is economic development agendas that want to operate in multi-sectorial industries.
Thank you very much, Mark. Yorgos, if you would like to add to this point, also, if you could share with us what you see in research coming out, comparing innovation in business models, more maybe from the entrepreneurial side or intrapreneurial side.
Thank you, Saman. Actually, I would build up on both comments from Vanessa and Mark, and I would tend to say that there is a more central characteristics into the two equations. According to research, sustainability and let's say wider social responsibility imperatives are achievable through business models which in essence facilitate decentralization. And it's true, if we look at the heart of circular economy and what just Mark said about supply chains, and actually the example also that Vanessa just gave from her call, they all indicate into these decentralized models. And that's a feature that circular economy will have, especially if we want to really be successful to implement it. So then if you touch on the word decentralization, then what is missing? Blockchain. So the whole point here is that I think that there's not a question whether it's enabling it or not. I think it's a matter of maturity on how these will stabilize around us, because there is always a level of maturity. And there are many applications that we can think of. For example, to be able to prove and verify the origin of a product. This is really, I mean, right now what you do, you see a label. You buy something, you see a label. Can you really verify that label? Can you really, cross-check it with something? I'm not really sure. So the whole point here is that I think that what we're looking at is if I would say a combined evolution and revolution at the same time that will, allow me to be provocative. I don't think that it has even started yet. So we're just looking at the first attempts here and there, and what we are about to see in the next 20, 30 years, I think it will be, if we are calling today disruptive, I think 20, 30 years from now, it would be totally different environment. So that is why we totally abide to technological developments when we're thinking about circular economic business models, because definitely all these technologies, including big data, artificial intelligence, machine learning, and other technologies, they will help us a lot in the fight that we're doing from the shift from the linear model to the circular model. So this is what we're looking, this is what we're focused at, and I would totally echo both of the comments made by Vanessa and Mark.
Thank you very much, George. Yorgos, you mentioned a very good point that also goes well with the question that we got from Tony, the first question. He's talking about the Gartner's hype cycle, and he's asking if is it going to reach the plateau of productivity, considering recent development of EU to adopt blockchain as an infrastructure. So, Vanessa, what is your take? I mean, since you have been working within the industry, and you're also today working with investors basically, and you're seeing everything that is going on in terms of the trust in this technology and the development of the technology. Do you see the blockchain technology as mature enough? Can we say we are close to or already there, or still a long way to reach the plateau of productivity?
Sorry, no, I think we're very, very early right now in the life cycle and just the innovation cycle. We're barely, setting up the picks and shovels for the Web3 infrastructure. So I think we're very far from that. We only currently found some product market fit with NFTs and sort of the wider consumer adoption. Currently, this is, developers building and creating new ways of new networks and ways of interacting. So I think we're very far from that.
Thank you very much, Vanessa. I would also like to ask you, the next question is, how do you see, based on your experience, the strongest trends of innovation when it comes to circular economy or impact-driven innovations in the blockchain space?
So I think, payments obviously is one area where, in essence, the innovation of Bitcoin allows you to transact borderlessly, and so piggybacking on that first innovation, we see a lot of business model around that. Now, in terms of more circular economy, there's a lot of stuff around sort of track and trace, and the possibility to identify also carbon footprint and carbon offsets and automate that a lot. So those are the two major areas where I see innovation.
Thank you, Vanessa. Yorgos, in terms of support from the EU in driving this adoption of blockchain, what is your take? Is it supporting us to go to take blockchain to mass market earlier, or we really need to get to that plateau of productivity first?
Sorry, I was well, I think that when we're talking about the EU, we need to think in two chunks. The first one is the EU policy, and the other one is the EU industry. If you talk about the EU industry, I think they're very keen to do a lot of things, and they're very keen to take things forward, and they're very keen to, because the driving force, it's also the viability of the companies. So they have to live up to the competition, whether the competition comes from the US, from China, from Russia, whatever. So the EU industry, I think it's quite into that. And also I would tend to say the EU academia and research is quite working on solutions, on applications, and they would be willing to be there. Now, when it comes to the EU policy, there is why you have a number of things that well, I'm not going to say they're not going right, but they're going slow, because the EU has, for example, adopted a blockchain strategy. And there are a number of elements included in that strategy, which is, for example, environmental sustainability, data protection, digital identity, interoperability between systems, a number of things, which, of course, when things goes fine, nobody's looking at these kind of things, or nobody's looking for, they want to, to govern something. But when things, go south, then someone is looking for someone. Why didn't you do something? You are the policymaker, you are the regulator. So I think that what we have seen in the past, also for many things, I mean, just remember when the cloud came into the forward, when did we have the first policies and regulations? Years after. So the whole point here is that there's a little bit of maturity required until you synchronize both things together. And let's not forget that at the EU level, the EU covers a number of member states. So it's not just a country or so. So there is a lot of impact. And because also a lot of EU funding, which constitutes EU member states contribution, has to go into targets identified by the EU. So again, the industry is pushing. Actually, the research is pushing as well. The external landscape is pushing. And I think that, at least to the best of my knowledge, I think that the EU, they're doing a fair effort to keep up to the developments. It's going a little bit slower than everybody would like, but they're really working on it. So that's something that we can vouch for.
Thank you very much, Yorgos. Mark, as an expert and a professor of competitiveness, working on clusters and ecosystems, can you tell us more about the importance of ecosystems and clusters when we talk about blockchain for circular economy and impact solutions, maybe linking it also to the maturity stage of blockchain?
So, Saman, and I was also looking at some of the question comment, right? So I'll try to maybe equally provide a perspective on that. Investing on blockchain only today, it implies that blockchain is a standalone technology, which is not. These are convergent technology, they're interoperable, they're designed to serve other purposes. So the Gartner cycle, as was mentioned by somebody in the chat, it's a methodology that has an expectation on how technology should work, but there's also a methodology that cannot really determine the difference between prediction and options in the future. So I always take the cycle from Gartner with a pinch of salt, right? It's an expectation of what we think technology will be, but there's so many implications that most of the time, just make sure I tell you straightforward, they're wrong. It's the ecosystem that defines how quickly something accelerates because it's becoming instrumental to the creation of value. So when you're building on an ecosystem structure and you're using blockchain as a way to define storage of value, then of course you increase the use of blockchain as a matter of fact. Then of course you're enhancing the digital outcome, your digital economy, you're supporting the startups that want to move into the ecosystem. So I think ecosystem is probably where we should focus the most. Blockchain is becoming an ancillary that defines that as an ecosystem that is more technologically advanced because it simply allows for a given kind of language to be part of how some of these companies are operating. So I always say this part of an architectural point rather than a standalone technology, right? So I think that's where likely in the future, some countries will likely understand that building ecosystem will come with the benefit of building the convergent technologies that are part of it. And if we don't do that, and we're just shifting over to the silos or the vertical on the technology, we risk to see technology developing very well in a given region, but hardly capable of being transferred portable elsewhere. And I'm going to finish on this, Saman. I was having a conversation with senior partner in two different moments from McKinsey and from Accenture. These are people who are operating in global roles. So they tend to see different things. They all feel that the investment in blockchain so far is not as much as it should be, exactly for this reason, because sometimes we think of blockchain as a standalone story. We should see this integrate into a much larger sense of economic growth. And how does it support the creation of both goods and services, depending if you go and look at blockchain within the measurement of sensor in the production of physical goods, or if you're going to look at blockchain towards services. So I think there's a bit of misconception around it, and we need to demystify, right? But ecosystem, as your question points out, is truly where I think the thinking should go.
Thank you very much, Mark. Bouncing off the last point you mentioned, I would like to also ask Vanessa's perspective regarding the interest of investors into blockchain technologies. Is it more coming from the public or from the private funders, or and also I would also ask you what are the main areas of interest from investors, Vanessa?
Sure. So we've seen recently an influx of institutional investors come into the space very strongly. A lot of people are coming from the trading side. So a lot of hedge funds are now allocating a portion of their assets to Bitcoin and Ethereum and starting to trade that. From the VC side, a lot of family offices, a lot of large institutions now and pension funds, and also you see large corporates come in and want to capture that opportunity. The main areas of interest are decentralized finance, I would say, and then all the layer ones and infrastructure. And then most recently with NFTs, a lot of large corporates are now experimenting with blockchain and also trying to invest in the space. We were lucky to be very early investors in NFTs, and so had a track record there. But we see, you know, a growing interest from investors who are no longer afraid to be looking at something that is that has a bad reputation, right? Recently, there's been a lot of discussion on ESG and whether, you know, those investments were compliant with ESG, and we're finding ways, and institutions are finding ways to offset their carbon footprint so that it's neutral from a carbon consumption.
Thank you very much, Vanessa. Mark, also, you mentioned a point that also could link to this third question from Tony. Asking few nations such as Singapore focus investments in digital economy rather than blockchain. Is this policy option sustainable? So what is your take on that, Mark? Also, would you agree with the fact that blockchain, as we briefly touched upon, isn't it a sort of a missing piece of the puzzle when we talk about digital economy? In other words, can we have a complete transformation to digital economy without blockchain?
So, Saman, you could, of course, because they are technology, they're not necessarily exclusive on blockchain. You can still have optionality, right? To the question, I mean, building a digital economy implies that there will be a conversation on blockchain. They're not mutually exclusive. The fact that you have in country that have a direct strategy on blockchain, I think it's just an early stage of the maturity where the country is in terms of understanding the technology spectrum. Singapore is ahead of the curve, will continue to be ahead of the curve for the foreseeable future because they've been investing in the diversification of their economy as the only way they have to actually survive, surrounded by giants. Just let's remember ourselves, where is Singapore and who are the neighbors, right? They also have neighbors like Malaysia and Indonesia who are now rising their technology aspirations. And so these are countries where Kuala Lumpur is directly running after Singapore to becoming the second in the region for attracting investment of a certain kind. So I think, you know, roughly speaking, I am not surprised that Singapore understands digital economy at a much deeper level of integration. Whether blockchain comes with it or not, I think is inevitable. But, you know, it's the same example when you're extremely integrated into a digital outcome as an economy. You're now asking yourself the question about blockchain. You know, it's a given that if you want your structure to be solid, diffuse, as George was saying before, decentralized, and as Vanessa was also implying, attracting the right level of investment, blockchain must be in the picture. But I don't think it's not a memo that is discussed on purpose. I think it's a much larger conversation about redefining value creation from manufacturing and services into creation of digital infrastructures that are eventually leading to the crafting of digital economy, which is nothing more than the creation of a large part of the GDP happens through digital rather than happening through physical goods and services, which opens up to a conversation that is different about currency, money, investors. So I think that that's where eventually digital goes, because when you're investing in a digital economy, as an investor, you have a very different thinking than if you're investing in a physical brick and mortar where you're still having physical assets. So that's all it means, right? It's a much more, I think, solid way of looking at investing into it. It's actually FDI policy, right? Both inflows and outflows.
Thank you very much, Mark. Yorgos, to your knowledge and based on the research, what are the main challenges of integrating blockchain solutions for circular economy?
Well, actually, I would say that the major challenges is to, first of all, define circular economy within the context of the business model. And then once you define it, then align blockchain and other technologies as well. So I don't think there is a huge challenge or a problem to integrate it. I think the problem relies more to the circular economy to start defining the new shift, the new business model, how this should shift. And then you see how technologies, skills, legislation, whatever, could service this approach. The only thing I can tell you for sure is that blockchain can enable a lot of those decentralized aspects that we're thinking about the business models. And as such, I want to put a little bit of a point here. Let's not underestimate the human factor. The human factor is huge in all these changes. And the human factor is the consumer, is the policymaker, is the regulator, it's many things. It's not just the scientist or the VC capitalists, et cetera, et cetera. And they also, with their attitude, have an impact on this kind of changes. So I think that what's important here to understand is that from the circular economy perspective, I don't see any technological limitation at all. Actually, once you design your models, it's all about enablers. And the problem is that we're having is that because this new model, this new discussion is not necessarily done by a blend of people with the different knowledges that can enable the whole scheme. So there we're having more transformation. There we're having a little bit more of evolution. I think that this will settle in a couple of years' time, but definitely we see that, I mean, out of 10 solutions that I see that are really propagating and making an actual impact on circular economy right now, are driven by technology. I'm not going to say by blockchain, but are driven by technology. So this is an important point to have in mind for the years to come. So again, circular economy, I think, is very compliant with the concept of blockchain and what it's supposed to serve. And definitely we look forward in business models aligning and applying these concepts, especially when it comes to energy, sustainability, ESGs, and many other metric systems that we're having in place. Last but not least, production cycles, supply chain. I mean, you want to break linearity, you want a disruption there, you need to use these kind of tools. That's the important key message here as well, especially when you're talking about massive productions or massive impact to many people.
Thank you very much, Yorgos. In fact, you mentioned the role of technology in circular economy and also in SDGs. There was this report from World Economic Forum and PwC that they were talking about the role of technology, and they mentioned that 10 out of the 17 SDGs, they have technology can have major impact on developing them. And actually, big data was one of the major technologies, AI, and blockchain was also mentioned there with with a role of 25% of impact on these 10 out of 17 SDGs, which is like about 70% of the 169 targets, which leads to another question for Vanessa. Vanessa, you mentioned talking about investments. You mentioned that we see an inflow of investments coming from traders, basically. It might sound like speculation rather than investment when we talk about companies investing in Bitcoin or Ethereum. How do we clarify that? That is it speculation, or is it actually helping with the development of blockchain-based solutions? In other words, why they don't just directly invest in blockchain solutions and projects?
So I think it really depends on how your investment is set up. You know, if you're an asset manager and you can only trade liquid names and you can only trade on specific exchange, it's easier to do that, and that's in your mandate. If you do private investments, it's another, you know, sort of life cycle and return model. So I think it really depends on both. So what's interesting with the markets is that liquidity in tokens comes very early in the projects and allows for this growth and for companies to get access to incentivization schemes very early to connect with other projects and grow. And so the more your token is used and traded, the more it accrues value to your protocol and allows you to grow the protocol. So it's a little bit of a blur between like what is traded by the traders and what is invested in by sort of more the VC route.
Thank you very much, Vanessa. Mark, related to what you explained about the role of ecosystems and creating that sort of support, and also the clusters, and what just Vanessa mentioned about that type of support that is brought by investors into protocol tokens and enabling development of blockchain projects. What is your take for countries that are not very open to these type of crowdfunding or engagement of the public into the blockchain space?
So Saman, I think that generates a pressure that sooner or later will have to be addressed. You know, to give you an example that I think is a good story, when cryptos were becoming more and more popular in the West, Latin America was completely closed about it. I remember I was there in a conference in Ecuador, and they openly said, it was the bank association of the entire region, that cryptos were illegal. Today, we have a president of a Latin American country in El Salvador who is openly saying that he wants to use Bitcoin as an official currency, right, for his country. It shows you that no matter how much we'll try to resist some of these changes, we can't. They're becoming part of redefining the competitive landscape. Before, we were mainly competing on what we produce, commodities, the prices. Today, we're competing on a very different set of variables. So I don't think it's going to be like a door being closed forever. I think the question is whether when countries decide to move in the direction of a technology strategy, whether they'll play an active role and they'll sit at the table of decision makers, or whether they'll have to actually undergo rules that have been decided by somebody else. So I think this is critical time for a country to have a data strategy, a technology strategy, a strategy around technology in general. You know, I don't find that we can afford anymore a choice by saying, let's see and wait. There was back in time, there was the first mover advantage where people say, go ahead, I'll see I'll sit and see what happens, right? Because the idea was the first mover will carry a risk that I don't want to carry. Today, staying still has a lot of risk, right? So I think we're no longer in ability for us to make that determination, Saman.
Since you mentioned, Mark, follow-up questions on that one quickly. If you could please shed some light on some risks or opportunities involved with El Salvador's move to bring Bitcoin as a legal tender from a monetary policy perspective.
Yeah, Saman. So again, on a personal level, I am skeptical that can work because Bitcoin is designed to be inelastic, right? Because of the limited supply. So you're putting yourself in a condition in which the fluctuation of a currency might be too big than the spread you want to expect within your currency, especially if you are El Salvador. And therefore, you're always very, very dependent on the basket of currency, on the US dollars. If it's the US making the conversation, I think it's going to be a little bit more engaging to see what could happen. But I don't think that is a conversation that goes anywhere. And I think there's a clear idea around this. And again, it's just my 2 cents, right? Is thinking of Bitcoin as a currency. Yes, it's a cryptocurrency, but the whole purpose of crypto is not to mimic exactly the currency. It was at the very beginning a social experiment to try to determine that if you can define trust outside of the centralized structure, you can, to some extent, create a market mechanism. But today, cryptos are much more financial instruments than anything else. In fact, the financial market have always been operating within volatility. Crypto are perfectly designed to operate within that spectrum, right? So I'm not surprised that it is now that crypto is now eyed by a lot of financial investors. So I'm a bit skeptical about that. It doesn't mean that I don't think that crypto are important. I think they're extremely important, but place them into the right place in our understanding where they play a role, I think is equally important.
Thank you very much. Thank you, Mark. Yorgos, to your knowledge, what is the EU's perspective on adoption of blockchain-based solutions? Are there regulatory or financial support from the EU, as you mentioned, also considering it industry and the policy framework both?
Well, as I said, there is a lot of activity around it, including, for example, the strategy I just mentioned. There are some conclusions that they came out in the European blockchain services infrastructure. There is a lot of discussion around the digital assets. There is a lot of research being funded within the context of the European Commission. For example, in the period of 2016 and 2019, there was about 180 million euros in grants within the context of the Horizon 2020, and there is much more coming in the next period. So, as I mentioned before, I think that the appetite is there, but if you are looking at the policy perspective, the process is a little bit taking the time.
Thank you, Yorgos. Vanessa, how do you see policy and regulations support or hinder innovation in the blockchain space?
So I think people are waiting on the sidelines. I don't think it will see a major regulation that will hinder the progress, unless you have authoritarian, governments that want to take a specific view on this. But I would say that in the key countries where the innovation is taking place, we feel pretty confident about the regulatory framework. Of course, you have to work with the existing framework. We don't expect governments to shift those frameworks dramatically to take that into account, and I think we can live with it.
Thank you very much. Mark, you mentioned something that reminded me of e-governance when you were talking about the clusters and the ecosystem. What's the role of e-governance in promoting the grounds for innovation and integration of blockchain solutions?
Saman, I think is paramount, right, to have governments integrating technology to the point in which we can equally call them e-governments to some extent, right? it's also much easier for governments who do that to understand how the private sector thinks and how to attract companies that you want to have in your own territory. Back to the question you asked me about ecosystem. So I find it to be quite important. I always, again, when we're teaching, we always talk about Estonia because it was the first country that in the European context was able to make major leaps towards the integration of digital services at the government level. Remember, Estonia was a country that didn't have much of a choice. It was a small country, just brandly emerging from the fallout of the Soviet Union, right? So it was a country that rapidly understood that technology had a role. So I personally think that there are today countries that are doing that, and this is, to my understanding, really a good sign. We have initiative at different European levels. Europe is on board with the conversation. It's a large entity, so it takes time before this is becoming mainstream, but the conversation is on the radar. You have the smaller country that, of course, are much faster and they can easily move around, right? So they have been doing this. I mean, I guess you all heard about the crypto valley, right, in Switzerland. There's a reason why it happens in Switzerland, right? There is more blockchain application in, the Swiss government than if you see comparing to other large countries. We see this, of course, in the Gulf. The UAE is quite open with that and is moving forward with, I think, a strong government service that is determined by the use of technology. I actually, in the case of the UAE, the government is ahead of the curve in comparison to the private sector, right? So, and then you have in countries like Israel, you have countries like Singapore. So I think governance is getting into the conversation. Where I think the conversation is still missing a component is in the agility of the governance when it's becoming e-governance, right? Because if you're modernizing the technology, but you're not modernizing the processes, you're pretty much running the same old story with the problem of before, exacerbated by what technology might build in terms of Pandora boxes. So that's, I think, some of the conversation that I would have in this sense.
Thank you very much, Mark. Yorgos, how do you see this relevant to the discussion around smart cities and the transition to the circular economy? What is the role of e-governance there?
I think that Mark just made the point, especially the last one of the agility between, because what we are seeing here, it's, if I can call it, a revolution of technologies as well as applications, because don't forget that technology can be one thing, it's one thing, and then applications can be many things based on one technology, and then when you are converging technologies, then it's becoming a little bit of, so the question here is that there is a huge revolution which comes in too many increments and too fast, and by the time that you start thinking adopting this one, it's already obsolete or evolved or something like that. So I think that the agility is a key consideration in everything that we do, especially when you start embedding it into cities, and especially if these technologies will start running sensitive things, whether they will be helping, for example, operating cities, whether they will be helping to make the cities more effective, more efficient, and more environmental friendly. So therefore, there where we have to be able, because governance does not always means government. So that's another key point. And unless we sort these kind of things, we will end up where Mark said that, okay, we have the most amazing car in the world, but we don't know how to drive it. So, okay, back on the bicycle. So the point is that we have to align all these kind of things together in order to be able to get something out of it. And this is not this kind of economic theories, Adam Smith and the invisible hand that will fix everything and will make the market, et cetera, et cetera. There's a little bit more complicated discussion here. And that's why I think that we see, by the way, all the impact. And I think that Mark, who's teaching to a lot of people, can confirm we see the impact on education, on the people we have in the classes, the kind of questions they're asking. I think that, most of the times we're really embarrassed by the fact that we don't know the answers because they're so ahead of the development. So it's a little bit now the game has raced. So the whole concept, I think that is very important that for me, the key message here is that we should not, it's forbidden to be looking at things in isolation, in silos. We have to start thinking in integrative models, in agility, et cetera. Otherwise, we would just, fundamentally not achieve much of an impact.
Thank you very much, Yorgos. Can't agree more with what you and Mark mentioned. Also, it's in line with what Sir Jeremy Rifkin mentions always about plugging the right technologies into the right infrastructure. So the new technologies, as they are rising up and they are building new ways of doing things and giving us new accessibilities, if we don't have the right infrastructure to plug them into, basically we are going nowhere. So that leads to a final question to Vanessa, talking about preparing the grounds and preparing that infrastructure from the investment perspective and based on your experience. Do you see that in the US, the cultural awareness and maturity of investors is driving the development of technological infrastructures towards isolated technologies for maybe higher gains, which is less riskier in a sense, or rather higher risks, more forward-looking, and building on the digital infrastructure for the long term?
Yeah, so I think in the US, there's just more capital allocated to early stage investing, and that allows you to, surface more winners, basically. And so I think in Europe, there's an underfunding, an issue with the underfunding of a lot of the early stage startups. And I think that risk appetite is, of course, much higher in the US, and the rewards, the incentivization makes the rewards higher too. And so building on that, the fact that you have the opportunity to receive funding, even if you just have an idea, and that it's not that difficult, whether you crowdsource it or you go to a VC, etc., I think makes it much easier to foster more innovation. It's just more is more,
Thank you very much, Vanessa. So with that, we are getting closer to the end of the session. Mark, Yorgos, do you have any final comments?
Well, I can go ahead, Saman. So I think I have myself learned a lot from the conversation with George and Vanessa, and your questions, Saman, they really help framing the conversation the right way. So I'm hoping that this is creating a space for people, going back to the quote from Rifkin that you actually mentioned, to really place the conversation we're having within the right context, if we just expand a bit more, right? And how technology needs to be understood not just as an efficiency enhancer or just as a tool to an end, but something that is much more of a collective purpose and design and what we want out of it. And I think it just probably at that level of analysis that we should really move. Going back to what Vanessa said about the funding in the US versus Europe, that's really what we want to see, that we start, first of all, stop feeling that we should mimic the US system. European system is very different, and it should have an ecosystem of its own, right, with its own spirit and thinking, right? And I think that will be a really great step forward. And going back to what George said before, I think in the past, seeing things in isolation was the easiest way to come up with a quick conclusion, right? And sometimes it was okay, but today we got so many interwoven layers, right? That technology equally follows the same path. So I appreciate a lot where we have gone from where we started, and also very pleased to meet Vanessa and to see George again, the legendary George, as I call him.
Thank you very much, Mark. Yorgos, any final points from your end?
Quickly, the circular economy imperative is totally compliant with the blockchain imperative. Second, Vanessa, thank you so much for being with us today. And thirdly, what I omitted to say at the very beginning, that basically the Circular Economy Research Center is a spin-off of myself being a spin-off of Mark many years ago. And I'm very happy that we're having these kind of conversations, because basically our decentralization and our incremental agility has brought us together every time to discuss difficult topics, and we were never afraid to touch, to the hot zones and bring people like Vanessa and others into these discussions and shed lights to questions that many people have. So thanks, Saman, also for organizing that.
Thank you very much, Yorgos. It's always a great pleasure to have you and Mark supporting this series and also bringing your valuable insight. Vanessa, any final comments from your side, please? Anything before that?
Yeah, and to piggyback a little bit on what I was saying about infrastructure between the US and Europe, what's unique about blockchain is that the talent is global, the funding is global. And so if you have a good idea, there are networks where you can get funding globally. And so you don't, like most of the teams are distributed, they're not in one country or one, they're all over the world. Information is available all over the world. It's not just a Silicon Valley thing. So that's what's pretty exciting about it. So if you have a good idea, whether it has impact, you'll be able to create that project. And I think that's what's unique, and that's where the opportunity is. And I think building talent through education is really the key to success for any country and any ecosystem, basically.
Thank you very much, Vanessa. Thank you for being with us. So thank you to all the participants as well. I shared the link to subscribe to our mailing list if you're interested in such topics for our upcoming episodes of From Emergence to Convergence series. So it's been a delight for me to have these three good friends and the experts on the panel. And I thank you all very much, and we will keep this conversation going. And from Paris, I wish you all a good evening and have a good afternoon, Vanessa, and to all of you. Thank you very much.
Bye-bye.
Thank you.
Bye-bye.
Bye, guys. Bye.